Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at a long setup here on gold. Just got filled long at 1207.6. Let me get my first target in place here, and the second target in place up there. Perfect. So what we're really looking at here on gold is we're pulling into a wave pattern here, but we're pulling into a wave pattern at the channel lows after a really aggressive move back up to the upside right after the open. After the open hit, we shot up, 10, 15 ticks, and now we're pulling back. This looks like it's just the opening range pullback where, we get that big burst, kind of take a little bit of profit taking from that initial move, and then it just goes right back up again. So we're in long right now at 1207.6, looking for the first target to come off right at this little swing up here at 8 ticks, and then looking for the next target up here at 1210, and that will give us 24 ticks on the final one, 8 on the first. Now we are taking 2 contracts off at each, so technically it's 16 at the first one and then 48 at the second, so that gives us 64 ticks total on this move higher, and it's setting up to be an absolute picture perfect. The only thing that would have made it look a little bit better is if we came into our perfect little trigger zone there, but in this case we came in a little bit early. Sometimes the pattern doesn't set up exactly 100%, but with all of the other factors it's really hard to ignore that setup. I'd much rather it be early than late, put it that way. So we came into our a little bit ahead of our trigger zone here, and then immediately just rejecting back up, and just like that we've already got that first target filled. So put the stop to break even, and now we're just gunning right up to the second target at 1210. Not too far away really, and so far this move has been pretty straightforward. It's been nice and aggressive. See if we can, we might not even have to pause it and see if they can just push it up. We're already breaking the highs, getting a nice follow through. This is the nice thing about taking trades around the open. Sometimes taking trades around the open can be higher risk. Gold opens at 820, gets a little bit volatile because everyone's jumping in all at the same time. But at the same time, you get a lot of movement. And if you have a picture perfect setup like we're seeing right here, nice cross back up to the upside, nice 4, 5, 6 continuation wave pattern off the channel lows. I mean, everything else is setting up perfectly. You can get a really quick move back up. So haven't really caught that move that we were looking for yet. We have broken the highs though, so that's kind of what we wanted to see here. We're only 8 ticks away from our second target. Oh, well, there we go. We're getting closer now. Oh, wow. Okay. Remember that volatility we were just talking about? Well, there it is. So you can see it's getting a little bit whippy here, but we got our target filled up there. Perfect. Just a picture perfect trade to the upside. Like I said, the only thing that would have made it look just slightly better is if it came in a little bit later. If it came in towards here where it really tested that channel low down there, that would have made it look really, really pretty. But the fact that we came in a little bit early on an already aggressive move, you kind of expect that. So definitely more than happy to at least hop in half size, if anything, but really gorgeous trade to the upside. So got both of our targets filled. 2 off at 8, that gives us 16, and then 2 off at 24. Quick little move up there, that gives us 48. So it's 64 ticks total on the trade up on 4 contracts in really, really fast time, and we've only been recording for about 3 minutes. So that's going to be the trade for today. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com, and as always, we'll catch you next time.